Hi, this is Holly Haven with Haven Home Team, your North Texas no-filter realtor. Today we're going to run through the entire home buying process from beginning to end. And it's a little bit longer video, but we did put some chapters down there for you. So please feel free to skip through the video, find the parts that are really important to you, and reach out to us with any questions at all. We are here to be a resource for you. So let's dive in and get started. The very first step in the process to buying a home actually starts with the lender. So we want to recommend a local broker. We have several that we work with and that we can refer. We do not get anything from these lenders, but they take exceptional care of our clients. So we highly recommend that you start with a local broker. They can shop rates for you. They have their own incentives and fees. And they can also look at programs that might be suitable for your specific circumstances. Once you've found that lender, or maybe you have 2 or 3 lenders that you would maybe like to kind of interview or compare, we highly recommend that. So we think it's a good idea to go ahead and apply with at least 2 different lenders, depending on your circumstances. That might be a local broker, and then down the road, as we're in the home search process, you might want to apply with the builder lender as well due to some incentives that they might have in place. But when we start with that first loan approval, you need to be prepared to provide things like W-2s, pay stubs, photo ID, as well as allowing them to pull your credit score. Lenders can give you an idea based on a quick questionnaire, but we really need to know that you are fully approved and ready to dive into that purchase process before we find the right home and start making offers. Once we have that number in mind, right, the approval process is to allow you the flexibility of finding the perfect home within your budget. So you already know what to expect on payments, down payments, taxes, all of those additional fees, so we can dive right in. So once we get into the home search, we are going to ask you 100 questions so that we only need to look at about 10 houses. That simplifies the process for you and for your realtor. When we start to narrow down that search, we will want to know things like what you actually need in a property. So your commute, or maybe school districts are going to be really important to you. Maybe it's some near family and friends, or maybe it's near a hobby, or something else that you want to be close to so that you're not driving 45 minutes to get to your favorite locations. Now, taking all that into consideration, we also have to review your budget and what you need out of a property, whether it's a certain number of bedrooms, bathrooms, 1-story versus 2-story, or maybe it's that you have to have a game room or a media room, or that you need a little bit of land because you have big animals. We can take all of those details into consideration as we put your home search parameters together. But as we've discussed, that lender process is the very first step because we do not want you to fall in love with a home that you absolutely cannot qualify. So we want this to be a really positive experience, and we want to help you find the best home in the best location with all the things that you need at your specified budget. Once we find the perfect home, it is time to make the offer. And in North Texas, we are in a market where the best homes do move very quickly. Even if we are in a little bit of a slower market time even, we do need to be prepared to make very competitive offers. And in order to do that, we do not just throw a number at you. We do not suggest that our buyers always make a full price offer. We want to run comps on the property. We want to see if we can find out what the seller motivation is. We need to know what the buyer's motivation is. If you have to be within in a home within 30 days, then we are going to need to look at those offers to make sure that they are very competitive so that we can try to get you to the closing table and moved in to keep you from being homeless. Now, all of that being said, we will always view your home as a financial investment as well. So not only do we want to run comps to make sure that we're getting the value, but the lender appraisal needs to bypass or needs to cover this total contract price. So we need to be prepared for all of those things so that we don't run into any unforeseen hiccups along the way. So based on all of the factors that we discussed, like maybe days on market, is it priced appropriately for what else has been happening in the neighborhood or the surrounding area, and we make that offer. Then we want to hopefully win the offer, right? So if we go under contract, there's a few things within the Texas contract that I think you're going to want to be aware of. So that's what we're going to cover next in this video. There's a section in the Texas contract called exclusions. And what this means is any item attached, physically attached to the property that will not convey at the time of sale must be excluded out of the contract. So we actually make notations on things like maybe you have garage shelving mounted in the garage, right? The seller may have this. So the buyer may not be getting that as part of the purchase price. So it needs to be noted in the exclusion section of the Texas contract. We often see things like curtain rods or TVs, TV mounts, any maybe grill that might be mounted on the exterior of the home. More often than not, those do convey at the time of closing. However, we may see these items excluded. So we need to know that up front, and we will discuss that with our buyer clients as we're going through the contract process so that you are very aware of what you're purchasing and what you're agreeing to before you go under contract. There is another portion in the Texas contract that I want to just mention briefly because we do have quite a bit of land sales, large land plots that still happen in this area. So mineral rights is something that could definitely come up. We see it even on smaller lots where a home has been owned by the same property owner for a long time, maybe 20 plus years. And what that is if you are in an area that could have natural gas, you may own the mineral rights. So as I mentioned, especially if it's somebody who's owned the property for a long time and those rights have not been severed from the property. I would like to put a caveat here that more often than not, the seller does not own the mineral rights and cannot convey them. So oftentimes we will see that those mineral rights are being reserved by the seller. However, the seller may not actually own those rights. There are some things that go along with that. I will not go too far down that rabbit hole today, but I did want to mention it because it's something that comes up occasionally. A question we get asked pretty often is, what are the fees I should expect to pay as a buyer the minute I go under contract? What do I need to be prepared for? So those are two items, and we're going to start with earnest money. Earnest money is usually about 1% of the contract price. So if it is a $500,000 home, we are generally going to offer somewhere around $5,000 as earnest money. That earnest money does need to be paid within 3 business days of the contract being signed by all parties. So if we need to pay $5,000, we need to have those funds available and liquid in an account where we can write a personal check and it can be delivered to the title company. We also have electronic options for delivering those funds, but the funds do need to be liquid and available to be paid at the time of contract because you only have 3 days to get those funds deposited. Once those funds are deposited at the title company, they are held in escrow. So this is basically a third party that is just managing the contract process. They are clearing title and they are holding any funds in escrow until we get to the closing table when the funds will be transferred to the seller. That earnest money will be treated as down payment or closing cost. It's part of your total cash to close. So basically you're putting that $5,000 or 1% of the contract price. And guys, that number is negotiable. It's maybe you want to come in really strong and you're going to put down 2 or 3%. It's not something we see all the time, but it is something that could come up. So we want you to know that that is not a hard and fast rule on 1%. But the funds do need to be available based on whatever we have contracted. The other item in the Texas contract that you should be ready to pay upfront within that 3 days is called the option fee, or the option period. You may hear it referred to as the termination option. We use this opportunity in the contract to have a property inspected, but we have to pay for that right to cancel the contract. In many cases, it may be as low as $200. I've seen as high as several $1,000s, depending on the contract price, the property, and the market that we're in. In most cases, we can expect $200 to $500 for maybe 4 to 7 days for the option period. What that time frame in the contract allows us to do is have the property inspected. So the buyer does pay for a third-party inspection. You are not required to do that. However, it is highly, highly recommended because you are taking on a property that you don't know anything about other than what the seller has provided to you in the seller's disclosure. So having that property inspected is going to be very important to give you not only peace of mind on your investment, the property that you're purchasing, but also on the flip side, if something really is wrong with the property, then we need to do that, have that discussion right now during the option period, because the buyer does have the option to terminate the contract, and the only thing they are risking is that termination or the option fee. So let's say we put down $200 for a 5-day option period. During that 5 days, we would have the property inspected. We might go ahead and negotiate some repairs. If we do that, we can have it in the contract that $200 or $500, that option fee, gets credited at the time of closing. So again, it goes towards your closing cost or cash to close. If you terminate that contract, then what you are losing is the option fee. So maybe only that $200 or $500. You will be refunded your earnest money. So if a buyer in the state of Texas puts $5,000 down for earnest money, and they put $500 down for an option fee, and they pay a third-party inspector, and let's say maybe that was $600 for the property inspection, and you cancel the contract, you are going to lose the option fee of $500 and the inspection fee that you paid the inspector directly. But you're going to get that $5,000 refunded to you very quickly by the title company if you have to cancel the contract. Otherwise, as I mentioned, all those fees go towards your closing costs at the time of closing. Compared to many other states, Texas has a pretty short closing process. In most cases, we can close within 30 days. If it is a cash purchase, we can close in as little as 10 to 14 days. So from the date that we execute the contract, we do have a closing date actually written into the contract, and we need to be prepared to pay all of our closing costs, bring that cash to the table, and sign the final documents on the date that is noted in the contract. We do have a little bit of leniency, and sometimes, we hit a roadblock or a hiccup, and there are ways that we can amend it. We can push the closing back. We can move the closing up. Sometimes life simply happens, and we have a situation that doesn't allow us to be at the closing table on a specific day, and we didn't know that 30 days in advance. So we can always work through those items in most cases. However, if we write a contract on April 1st and we say we're going to close on May 1st, then we need to be prepared to have all of our funds together, our lending completely outlined, and everything ready to go to take possession on April 1st. Texas is what we call a title state, which means we have title insurance and we have title policy, and we work through a title company. That being said, it is in comparison to an attorney state. So we do not have attorneys work directly with clients in the state of Texas. At least it is not a requirement. Occasionally, you'll have buyers or sellers who have attorney representation, and that's completely fine. It is absolutely not required in the state of Texas, and it is not really even common practice on the day-to-day single-family home residential transactions. So what happens is the title company is in charge of clearing title. They are going to hold those funds that I mentioned in the beginning with your earnest money and your option fee. They're going to sit at title. Then they are going to work through the title process to ensure that you are gaining clear title on the property that you purchased. So they are running all of these checks in the background to provide you an insurance policy that says this title is clear, and if something were to come up later, you are covered by an insurance policy that will then be taken to the title company, and it will not be your responsibility. So we want to make sure that we're working with a very strong title company with a good reputation, and that you understand clear title and what that means for you. And if there's any encumbrances on the property, that should be found during the title search, which means when you come to the table at closing and all of those funds get transferred to the seller, if there are any liens or encumbrances on the property, those would get paid before the seller actually receives their proceeds. So that's the goal, is that everything is cleared before you take possession, and you get to move forward with the assurance that you have a clear title on your very large investment. As we're talking about this title policy, title company and the cost of the title policy are both negotiable items. In most cases, what we will find is whoever agrees to pay for that title policy fee, and I'm going to say it's approximately 1% of the contract price. That number is not exact. It's usually a little bit of an overestimation, but on a $500,000 property, your title policy might be somewhere around $4,500. There are calculations for that, but I did not do the math today for this video. However, you should be aware that the buyer or seller may pay for the title policy As I mentioned, in many cases, whoever agrees to pay for the title policy might also want to choose the specific title company. The title company in the state of Texas, they all charge the same fees, they are regulated, so none of that really makes a difference. Sometimes it's going to be relationships, or if you have a buyer or seller that does a lot of real estate and has a preferred title company, more often than not, it's going to be that the realtors have some relationships in the industry because we like that customer service aspect and we want our clients to be taken care of. So the title policy is a negotiable item. I have had it brought up several times that buyers or sellers think that the other side should be paying it. And it's really just another fee that comes off the bottom line. And it's what we all agree to. So when the buyer makes the offer as part of the agreement. So we might offer $500,000. Maybe we're going to ask the seller to pay title, and we're going to offer $200 for 5 days of an option period. So that could be a very normal transaction. We do have the opportunity to split the cost of title, which can happen as well. I will say buyers and sellers don't generally care who the title company is. As I mentioned, usually that is about a realtor relationship or previous relationship by the buyer or seller. In most cases, it's a pretty easy conversation. Whoever's paying for title generally gets to pick the title policy, but that is not a hard and fast rule. Unless you are paying cash for a property, you will likely be required to have a property survey. In most cases, especially if we are talking, that standard North Texas home that's been built in the last 10 years or so, if the seller has the existing survey in hand from when they purchased the property, or maybe they put, a pool in the backyard or something and they have an updated survey, we can pass that survey from seller to the new buyer. In most cases, those are accepted by both title companies and lenders. So that survey can be expensive if it has to be replaced. I would say in a general neighborhood, you might be looking at $500 to $600. But if we get into some acreage, then it gets pretty pricey. So having a survey to pass down can be very beneficial. There is another small option, which we won't discuss in too much depth today, but it is a little bit of a survey insurance. And it's a little box that gets checked in the contract, and I'm just going to throw out a number. It's about $150. It definitely has a range, on what we're covering and what the property is, but it's a pretty small fee, and it basically ensures that the survey that is being passed from seller to the new buyer is being insured in case anything were to come up later on that survey being incorrect. Okay, now I want to discuss the seller's disclosure. So probably 95% of the time, the seller is required to provide a seller's disclosure statement. And the seller can be held liable if they withhold information, are deceptive about something they should have been aware of. But in many cases, you have to realize that a seller may not know something is currently happening in the property if it just hasn't been found yet. We have found, things several months later where there's been a leak in a wall that just has not been found. The seller very likely was unaware of that if you're just now seeing the outward appearance. So a seller's disclosure is intended for the seller to pass on any relevant information about the property. So maybe it's the age of the roof, if they've ever had flood damage, anything's been repaired that really needs to be discussed, right? How old is the HVAC system? How old is the furnace? All of those things. So those are the things we want to take into account and that we're really looking for with a seller's disclosure. We just have to be aware that, sometimes you wake up and you have a major stoppage in your sewer and you don't know where it came from. That can happen the day after you move in, and it does not mean that the seller was intentionally not providing information or not making a correction. Sometimes it's simply poor timing. But that seller's disclosure is really important in passing along that information, and we want the buyer to have time to review that before moving forward into a contract. In most cases, we have it before we make an offer. However, in the contract, we do have an option that says, hey, provide it to me within maybe 3 days, and then there's a time frame for you to review it and cancel the contract for any reason if you see something in that disclosure that makes you nervous. So the seller's disclosure is really important, and you do want to look it over. Seller concessions. There is a section in the Texas contract that is asking for or gives the option for a buyer to request seller concessions. Let's say I offer $500,000 to purchase a property, and I want $5,000 in seller concessions to go towards my closing cost. That means I'm effectively offering $495,000. But the total contract price is $500,000. We're asking for $5,000 back at closing. There's a lot of different reasons where we might want to do this from a buyer standpoint. And it is something that is fairly common in the state of Texas. So it's something that could come up. Seller leaseback. This is an option for a seller to agree to close on a property. Let's say we're going to close on May 1st. But maybe they would be homeless if they moved out on May 1st. So they need 3 weeks in the property until they can move into their next home. We would call that a seller leaseback. And this is not super uncommon. It's something we saw a lot in the previous 2 years. And it's something we're expecting to see a little bit less of coming up here in our current market. However, a seller leaseback is not that uncommon, especially if we're going to ask for maybe 2 to 3 days for a seller to move out after closing. It just ensures that that funding has happened before the seller actually packs that last box and gets out of the property. It can also be used up to 90 days. So we've had this happen where, maybe a buyer is ready to close, but maybe they don't actually need to move in and the seller really does need to stay in the property for an extended period of time. We can attach that to the original contract for a 90-day seller leaseback. So it could be any, as little as a day and up to 90 days. A buyer leaseback is also an option in the Texas contract, and it is an additional addendum, just like the seller leaseback. It allows the buyer to move in early before they physically close on the property. I'm going to say this is not something most sellers will allow because unless the property is vacant possibly, and it just makes sense for everybody. But in most cases, the seller will not allow a buyer to have a leaseback. It has happened. I've had clients that it has worked out and it worked out for all parties. And so we came to an agreement on this. But I just wanted you to be aware that there is an option of a buyer leaseback if it works for all parties, just like there is for a seller leaseback. Okay, let's talk about closing day. So as we prepare for closing day, we have a few things that have to happen. There is a 3-day period where the lender must provide you basically your final closing docs, at least your final estimate. And that buyer has to sign off that they have received it. Then we have a 72-hour waiting period. So once we get past the waiting period, we can close. So we need to make sure that all parties are moving towards the same goal, which means the title company has all their documents, lenders have everything together. We can legally close on the property on the day that's intended. So once we get to the closing table, we will need copies of valid IDs. They cannot be an expired driver's license. It must be a valid ID, which can be a driver's license, a state-issued ID, or a passport. Can be a military ID as well in most cases. Then we will also have that final settlement statement. Usually we receive that about 24 hours before closing. And what that means is that the title company and the lender have agreed that everything is correct. All of the fees that are on the final closing settlement statement are agreed upon. Lender and title balance, basically. So we get that number to the buyers and sellers because we want everybody to be very ready at the closing table. They know exactly how much cash they're bringing to the table, and the seller knows how much they're walking away with once this property has closed and funded. So that being said, let's say the buyer is supposed to bring $10,000 to the closing table, right? We've already taken into account that they've paid $5,000 for earnest money and maybe $500 for the option fee. So there's $5,500 that has already been accounted for, and they still need to bring $10,000, right? Depending on the circumstances. That buyer must bring clean, clear funds. So it is going to be something like a cashier's check or a wire transfer. It cannot be a personal check. So there's just a few things that you need to be prepared for. Your realtor should be setting you up for success all the way through the process so that you know what to expect. But I do like to mention these little things because it happens every now and then. We have a buyer or a seller that shows up with an ID that is expired, and then they have to jump through hoops to find a secondary ID so that we can get all of this signed and closed and funded. If there is no leaseback in place and we are taking possession at closing and funding, then the keys get exchanged after the property actually funds. That does not always happen the minute you sign the papers. It can be a couple of hours. If you sign those papers late on a Friday afternoon, it may not fund until Monday. So again, just some things to be aware of as you're planning your close dates and your moving truck. You don't want to have a moving truck sitting in front of your new home that you do not have keys to yet. So we like to plan those appropriately. There are a few more things in the state of Texas that you might not be aware of if you're coming from another state or if you are a first-time home buyer. So homestead exemption is one of those items. After you close on your new home, you will want to get your new driver's license updated with your new address, and you will want to file your homestead exemption with your local taxing authority. So if you're in Collin County, you would file with Collin County for your homestead exemption. Denton County, Tarrant County, right, Grayson, all these others. Dallas County, right, that's another one that we work in pretty regularly. So your homestead exemption, it means it has to be your primary residence. This cannot be your second home. You cannot hold two homestead exemptions at the same time. It basically locks in your property taxable value, and it gives you a little bit of a discount. It says it's about 20% of a discount on your taxable rate or your taxable amount. The other thing it does is it does not allow the taxing authority to increase your property values by more than 10% each year. So it keeps you locked in to a little bit tighter, lower taxable rate. And our property taxes can vary anywhere from, I've seen 1.8% to 3.1%, depending on the taxing authorities and the property situation where it's located. So you definitely want to have a homestead exemption in place if you can do that. There's also, 65 and older, there's disability through Veteran Affairs. So we have lots of options for some exemptions that might apply to you, and that's definitely something you want to do as soon as you close on the property. You want to get that done as quickly as possible. Something we're having to talk about quite a lot lately is capital gains tax. Texas does not have a capital gains tax, but we do have a federal capital gains tax. If you have lived in a property less than 2 out of 5 years, you very likely are going to pay some capital gains tax on any earned equity on that property. For example, if somebody bought a home in North Texas, mid 2021, and they've seen a significant property value increase, and they were ready to sell that home in less than 2 years, they would have a tax amount that they're going to be on the bill for. So you want to be prepared for that. You want to know what you're getting into. We recommend that you chat with your CPA and discuss your specific circumstances. I've had buyers or sellers that really decided it made sense to go ahead and pay that capital gains tax because they had to make a move. They did not have a choice. And I've seen some hold off on listing their home until they've met the 2-year mark so that they can bypass the capital gains. So the most important thing here is that you're educated on capital gains, you chat with your CPA, and you know what your options are. There are 2 other taxable items you may run into in North Texas, and those are referred to as a MUD and a PID. A MUD is a municipal utility district, and it is a tax percentage that is collected as part of your taxes that you pay on your annual taxes to the county. I've seen in some areas where maybe it's 0.5%. What this means is if the taxing entity is 2.25 and then you have a MUD for 0.5, your total taxable rate is 2.75. Now, when we have a MUD or a PID, we usually see a slight decrease on that total taxable amount for the locale. So what this does is the MUDs and the PIDs are basically charging back the homeowners in one way or another in order to put the infrastructure in place for a development in a city that wasn't quite ready for such a large development. We see a lot of these across Collin County, and it's something you need to be prepared for because it is an amount that is going to either be paid on your taxes or it is going to be paid separately as if it's a tax. I've seen them paid out on a monthly basis if it's a PID, and I've seen them paid out on an annual basis as a PID, but they are often received differently, whereas a MUD tax will be taxed directly through your taxing entity, your local county, and you'll pay that as part of your total lump sum. A PID will be an additional payment on top of your monthly payment in a lot of cases. It's not something you can escape. A PID falls off of the property once it's paid off. In many cases, that's 25 to 30 years. You can pay it off. And then when you sell the property, you're selling it without that PID payment attached. In most cases, it doesn't make sense for somebody to do that. If it's a MUD, as I mentioned, it basically never falls off. It is a part of your taxes that you are paying annually, and that just passes to the next owner as part of the tax rate. Homeowners insurance in Texas may be slightly more expensive than you're used to if you're moving from another state. And a couple of the reasons really is about our weather. We get a lot of wind and hail damage, which means we get lots of roof and fence repairs. That being said, you want to really shop for your homeowner's insurance. Obviously, bundling with your auto helps in a lot of cases. Getting referrals, local brokers, as we mentioned with the lenders, they can shop rates, they can give you some different packages. And then obviously we have, the big name insurance agencies as well. I highly recommend that you ask for some referrals and that you shop some rates and that you compare your coverage. You do not want to be surprised when we get the first big hailstorm and you find out you have to have your roof replaced. We don't want you to be surprised with a 2% deductible when you were expecting an out-of-pocket of maybe $4,000 or $5,000, and it turns out that you're going to be paying maybe $8,000, $10,000, or $12,000 out of pocket. So make sure you're reviewing those homeowner insurance policies and that you truly understand what your coverage is, especially if you're moving from another state, because you could definitely get a surprise in your first couple of years. I would say on average, we get a new roof in many parts of Texas every 2 to 5 years. So we hate for you to move in year one, you get a big hailstorm, you definitely need your roof replaced, and then you have to be out of pocket a lump sum of money. So just be aware and know what your options are and be sure that you've gotten the best policy for your needs. Guys, thank you so much for joining me here today and listening and learning a little bit more about the home buying process in Texas. If you have any questions at all, please feel free to drop those comments down below. Feel free to shoot us a message, reach out to us. We're here to be a resource for you. We hope to have the opportunity to earn your business, but really our goal is to educate, let you guys know what to expect, and really just be here so that when the questions do arise, you have a guide. So we look forward to meeting you and chatting with you, and we hope you have an amazing day.